And welcome to ETF Edge, your go-to place for everything exchange-traded funds. I'm your host, Bob Pisani. Coronavirus fears not rocking the markets too much, but take a look underneath and you'll see plenty of money that's been moving around, particularly in the world of ETFs. So what's going on? Let's ask John Davi, CIO of Astoria Portfolio Advisors, Tom Lydon, CEO of ETF Trends, also with us, Andrew Channon, CEO of Procure AM, Bruce Bond, CEO at Innovator ETFs. Tom, I want to start with you. In the last week, we've seen heavy volume going to ETFs that track semiconductor stocks, Japanese equities, other global markets. Explain this to us. What's going on?
Yeah, well, there's been people taking both sides of the trade, Bob. Although we haven't seen a lot of price differential, there are a lot of people that are bullish, trying to get in on this trend on the upside, but a lot of people are scared. Not great news coming out of China. Apple downgraded what their earnings might be, and that with semiconductors, we might see more slower economy over in China, which definitely is going to affect the market.
One of the reasons I watch volume, in addition to price movements, is volume can sometimes tell you a lot. So on a day where there's not a lot of movement necessarily, for example, in the Japan ETF or the Thailand ETF or the Singapore ETF, all of a sudden there's massive volume. That tells me somebody's moving some money around. Can we really deduce anything by watching these volume trends in ETFs?
It translates into uncertainty. You look at Japan, again, not good economic numbers, higher taxes in the last quarter for sure. And then we've got the Olympics coming up. At one point in time, the Olympic Committee is going to have to come forward and say, are they going to move forward on this based on the coronavirus? That's up in the air.
I'll give you an example. There were a lot of people felt that the coronavirus is not breaking out worldwide. It's largely confined to China. But a lot of people were saying, aha, we got to look for the first signs that maybe it'll break out somewhere else. So maybe it'll break out in Singapore. So that on days when I heard that around in the markets, I noticed extra volume in the Singapore ETF, for example. So I'm not saying this is an early warning sign, but it is a way of sort of gauging investor interest overall, John.
Yeah, I think if you look at all the Chinese ETFs or any countries in Asia that have a lot of economic linkage towards China, they're all down like 6 to 8%. And then if you go to like Europe, US, a lot of those, market indices are down significantly less. But I think what Tom said is right about Apple. You got to watch single name stocks that now have supply chains in China, because they're going to start to produce more guidance lower and probably hit to the earnings. So I'd watch. I think that the impact is going to spread to Europe and US.
And John, you're very big on ESG and thematic type ETFs, so clean energy, water, lithium. I've seen volume in all of these. So lithium, for example, what's going on? Is this a play off of Tesla?
I think so. I mean, LIT is up 20% year to date.
LIT is the lithium ETF.
LIT is the Global X Lithium ETF. It's up 20% year to date.
What do we own here? I mean, lithium producers is the
Correct.
answer, but they're linked to the electric car industry, obviously.
Exactly, yeah. So, I mean, Tesla is, the biggest weight. It's about 11%. It's a top 3 holding. And, it's Tesla's contribution to LIT's year-to-date return, as you see on the screen, is about 10% of that. So, some people are using LIT as a way to kind of play the Tesla story in an exchange-traded, diversified wrapper.
Of course, we've seen enormous investor interest in Tesla, enormous interest. We get emails all the time. Is this going to last? Is it safe? It goes from 600 to 960 in a few days, and then down to 720, and then it's back up to 900.
Yeah.
Very difficult for a retail investor to play that. Is ETF a safer way to do it?
It probably is. I mean, I would encourage investors to have more of a globally diversified way to play thematics as opposed to picking individual stocks. It's a risk management issue, right? Putting all your eggs in Tesla versus a diversified basket.